right, welcome everyone to this week's Tuesday live stream. And welcome guys. It's good to see so many people here. And 4 likes. Wow. Thank you all. Thank you. Welcome guys. Welcome. All right. So I have some things to talk about. First of all, how we were correct based on all the analysis that I've given you guys since mid to late February. All the consolidated information, definitely helped us realize when the market was going to turn over and roll over, and eventually helped us, be short, right? Be short and have a bearish sentiment to the markets heading into Q2. Now, I also have a trade idea that I want to give you guys for all the public viewers out there and all the private members who are watching as well. And you guys are actually looking at it right now, but I will be going into it a bit later. So first of all, let's talk about the markets and kind of where we are at now. So I want to get rid of all my technical analysis there, and I want to show you guys something pretty interesting here. So what's up guys? What's up? Hey, 6 likes. Wow, can we get to 10 likes? Let's see. So there is some resemblance here to what we saw back in the Q3 pullback of last year. And what that is that, well, if you take a look at these 3 weekly candlesticks that initially started that Q3 pullback in July, you can clearly see that we came back down to retest the daily 10 SMA, and then on the 3rd week, what do we get? We got a nice push lower, and we broke below the weekly, 10 SMA here, this red line. And right after the 3-week pullback, we got stuck in between the weekly 10 and the weekly 21 SMAs, just like how I talk about on the daily time frame. And so once we broke below this weekly 10 SMA, the next immediate thing that occurred was the retest of this weekly 10 SMA, and we used it as an area of resistance, an SMA resistance area. And I would like to believe that we can get something very similar to this as the weekly 21 SMA continues to crawl up higher and catches up to the price. And so again, it's not going to be the same, right? I'm just giving you guys something that looks similar to what occurred very recently, which was last year, Q3, in late July, all the way up into early August. Now, there are more catalysts to talk about that can give us and induce a relief bounce, a quote-unquote relief bounce. Because again, I mean, we've only gone down from all-time highs about 4%. All right, we're not even within the threshold of a textbook pullback of 5%. All right, so 5 to 10% is considered a textbook percentage range. I've talked about it multiple times in my videos and in my recent lives. So, this kind of tells us that there is a possibility for us to look for a bounce into this Friday's OPEX or after OPEX weeks, which is again after this Friday. So, I'm not trying to say that we have a parallel situation here where we're going to see a bounce next week and possibly even next week like we saw here. All I'm saying is that there could be a pretty solid bounce, which can still lead us into a lower high pivot point compared to the all-time high. And that's the same thing that's occurred here, right? We have this high here. That's where we start to reject initially, and then after that bounce, we created that lower high. So, I don't know whether or not this is going to be, a very structured pullback like we saw in Q3 of last year. Who knows? We might just fall really rapidly, and we might go into 5 to -7%. Who knows, right? But based on and judging by my SMAs and the current price action, there are multiple reasons to believe that we could be seeing at least a minimum small bounce in the markets before we head lower. Because again, mind you, I am not saying that I am already switching and reversing my bearish sentiment, because I am still mid to long term bearish. And in fact, most of quarter two, I'll be bearish, most of it. Okay, I told all my private members exactly when I'm expecting a pivot, or for the markets to, or when the markets will find some sort of a bottom before it decides to move back up into all-time highs. But I'll just let you guys know that I will be mostly bearish for most of quarter two. All right, that's a little wink there, a little hint. So now on the weekly time frame, I love the fact that the RSI, which is brought up here, is now finally, hey, what's up guys? Welcome. Make sure you guys hit that like button down below if you guys are enjoying what you're hearing, or if you guys just came in, you guys can smash that like button right away because it really helps with the YouTube algorithm. And we've been really growing on this channel lately, and all the views and the likes, so thank you guys so much. The algorithm is hitting. So, hey, 7 likes. Wow, thank you guys, thank you. We just started. I think it's only been, what, 7 minutes? But anyone who's joining in right now, you guys did miss a little bit of crucial information, so make sure you guys watch the recording. But again, it's only been 7 minutes and 30 seconds here, so you guys didn't miss too much, but there is some crucial tidbits here and there that you guys need to listen to. So, what was I saying here? Right, so the RSI, the Relative Strength Index, is finally not overbought on the weekly time frame. That's good news, right? That's really good news. Now, what's not good news is that we have this average line here, right? There's the average RSI line, and it's still in the overbought area. So we have crossed below this average RSI line, and I believe TradingView recently added this line here on its default indicator here for the RSI. But it crossed below, and the actual oscillator, the actual indicator, is telling us that the RSI is at 60. That's not bad, right? We're not overbought anymore. But whenever we see the RSI resetting, quote unquote resetting, we tend to see it come back down to a range of 40 to 60. Okay. So actually, no, not 40 to 60. I would say 40 to 50 for the markets, right? 40 to 60 is more for individual names, specific individual names. I tell my students that as well. But 40 to 50 will be a little bit more of a desired RSI range for the markets during a correction before it finds an actual market pivot, an actual market bottom. But again, that's just something that you guys should know. But if you don't want to use any type of indicators, and if you guys don't use any indicators like the RSI, that's completely fine. This is just additional information to kind of help you navigate the markets, right? So that's that, right? So the RSI is not below its overbought value. That's good. So 60, somewhere around 60 right now on the weekly time frame. Now, of course, we're gonna get eventually the retest of this weekly 21 SMA. Now, what I'm gonna be really interested in looking out for in the future is whether or not we hold this weekly 21 SMA, because mind you, we have gone straight up from October's lows. Okay, let's see how long this has been, or actually can't even get that right, but okay, there we go. So we went up almost 28% from October's lows, right? I believe it's 28%. So this is a very strong bull market, and I'm like 99.99% sure that we're not going to wipe out all of these gains, because we saw a lot of the sideline cash coming in as we continued to make new all-time highs. That's the reason why we're seeing such a resilient market structure to the upside. All right, so I am gonna bet that we're not gonna see a complete erasure of this move up. All right, we're not gonna see something like what we saw in quarter 3 of last year, where we completely broke all the way down, and we even reached that initial breakout point at 410. Okay, because I believe the October's lows were at 409.21. There we go. So we even broke below the breakout point that we saw in early summer, right? In early, I would say around early May. Okay, so I'm not going to expect something like that to happen, something of that magnitude. Instead, I really want to see where we decide to kind of pivot from the weekly 21 SMA, right? Whether we hold it or we see that weekly 10 SMA crossing below weekly 21, and we continue to move down until we retest the next major area of SMA support, which is my weekly 50 SMA, which is currently really slowly crawling up. So by the time that we do see a retest of this weekly 21 SMA, I would expect the weekly 50 to be around and near this 477.50 support level here, right? So this is the potential floor that we can get if we do, and again, if and only if we do see a textbook 10% pullback. So is that making sense, guys? Let me make sure my audio is doing well so you guys are hearing me correctly. Okay, perfect. All right. So anyways, guys, hopefully that makes sense. All right. So now if you go back on the daily time frame, okay, today was pretty interesting, right? Because we had some it's still elevated volume, especially when you compare it to the last 2 trading days, right? We were still slightly above the average volume, which is also starting to kind of slowly uptick, but it's still looking like the sellers are still not having too much of a conviction, even if we still have the underlying indications and signals that we should be moving lower, which is why I think that we could be getting possibly a bounce into this week's OPEX and obviously all the big earnings, like for example, on the top of my head, Netflix, right? Netflix has earnings on Thursday. So depending on how well earnings do, it should be pretty interesting to see if the markets will react to it. Because again, the markets are now completely invested into all the geopolitical tensions that are rising right now with, the anti-Iran coalition today that we found out about, countries like Jordan, even Saudi Arabia, basically helping out the U.S. by aiding Israel or against Iran's over the weekend's attack. So things are heating up, right? I'm just explaining to you guys that things are heating up. I'm not trying to get political or talk about which side is good, which side is bad. I'm just trying to go at this from a perspective of the markets, right? So it's definitely looking pretty precarious to try to be long-term buyers in the markets right now because of how sensitive the markets are becoming. And it seems like we're still following the headlines like I've outlined in this week's CFO Swinger Watch newsletter on Sunday night. And if you guys want to join that, make sure you guys DM me on Instagram. I have a nice surprise for you guys. So, it's going to be a little bit shaky here from this point forward because we have definitely started a new downtrend in the short term to midterm, obviously. But we've just from a technical perspective now, we've retested this 503 level. I've been touting my daily levels for the past couple of weeks. And if you guys did not listen, well, that's on you. That's on you guys. Because I've told you guys on multiple live streams in the past few weeks to know where my levels are at and put it on your own S&P 500 charts. So hopefully you guys did that. So, so far, all of my levels have been retested pretty nicely, even on SPX. So if you guys use SPX, that is. And SPY so far has held 503 today. There were signs that it was going to break below. We did start to fill in that gap up between February 21st and February 22nd. I would have much rather seen a rapid move down, a continuation today, another nice large price range day, a very wide, very wide price range day where we continue to take out buyers that are currently stuck in this area, and also the buyers who are currently defending this 503 support area. It's kind of the last line of defense here. So I would have much preferred seeing that today so that we can get a very quick V-shaped bounce back to the upside, but that's not what we got. Instead, we got pretty much zero participation from sellers and buyers. They were kind of on equal footing on both groups. So that kind of got me to, question whether or not sellers are going to be present for the rest half of this week, since we have such big catalysts like earnings and OPEX. So that's kind of one of the main reasons why I think there could be a bounce into the end of the week or even next week after OPEX, and also for the fact that I've shown you guys on the weekly time frame from last year's Q3 performance on the weekly time frame. So I think that's essentially what I'm looking for, is a small bounce. And if we do see a nice bounce, I want to see a retest of this daily 50 SMA, or at the very least kind of move sideways and form a nice bear flag, with constant bounces up and rejections down, bounces up, rejections down, and eventually creating a nice bear flag and allowing this daily 10 SMA to catch up to the price. Because again, we moved pretty far away on Monday, which is yesterday. And usually when we tend to move away pretty rapidly from my short-term 10 SMA, we tend to start moving sideways. So that's another reason to believe that we could be seeing a bounce tomorrow or even into OPEX. But if I want to see a good solid bounce, I will want to see a retest of the daily 50 SMA as a new area of resistance, right? Because again, the support at the daily 50 was lost, which means that all the buyers who were sitting at the daily 50 SMA were pushed out, just like that yesterday. And even on Friday as well, when we retested it and we saw some hard selling going into the retest of this daily 50 SMA. So, if we do see a retest at the daily 50 SMA, I would expect to see something like this, where the daily 50, let me bring my marker out. So it kind of starts to curl like this, flat lines and curls. And somewhere around here is where I would preferably want to see that retest coming in at the daily 50 SMA. All right, actually, let's make this dark blue so it's same color as my SMA. So, I don't know exactly how the price action is going to go. I mean, like people tend to ask me, how do you see the future? I'm like, I don't see the future. I'm just kind of drawing out my probabilities just like this, right? But this is one scenario that will be very ideal for us so that we can gain more energy and provide more conviction to the sellers, to all the net short sellers who are looking to continue to push the markets lower. And in order to do that, we need to see some good digestion and sideways action, and especially a retest and rejection at this daily 50 SMA. All right, so that will provide a lot more conviction for all the net short sellers who are still maybe on the sidelines, or maybe they took profits today and are now sitting on the sidelines, to come back in to push the price back lower. So, I truly believe that personally for me, I have a slight bias that we can see a bounce into OPEX. But again, if that doesn't happen, I'm going to have to put that thinking into next week and kind of follow the price path structure that we saw in the first initial pullback in Q3 of last year. All right, so we pulled back, retested the weekly 10 SMA, went back over it, hit a major level of resistance and a supply area, and then we continue to move lower. All right, so that's kind of what I want to see if we don't bounce into the end of the week. But overall, that's exactly what I think. All right, so that is it for this this live streams or tonight's S&P 500 review. I want to go over the new trade idea that I want to look at. So EOG. So EOG was one of those crude oil related names, along with VLO, which I got a great 200% plus swing trade. I believe it was 210%. And I could have held on for way more. I think that trade, I think it tripled from where I exited. So, I mean, huge trade on VLO. Still a big winner. One of the biggest winners for me this year. But I still think that, VLO itself can still see a pretty good move to the upside. But EOG, okay, if you take a look on the weekly time frame, so VLO, I'm not looking at it anymore because of the fact that we have made new all-time highs, but EOG still has a pretty good amount of strength left and a good momentum. So first of all, I mentioned EOG on this week, same with VLO. I mentioned VLO and EOG at the same time. Obviously VLO first, since it was a CFO Swinger Watch trade idea. And it was just breaking out this huge macro descending resistance trend line, and it got some amazing inflow into this name as a bunch of buyers began to bid the price up higher until we officially came up to my weekly resistance level at 136.35. And obviously, we got a huge rejection as we saw a lot of commodities like crude oil starting to digest the entire move up price action or trend from March. And it's still in that digestion mode on the weekly time frame. And I fully expect EOG to continue to move sideways from now, right underneath this weekly 136.35 level. And then eventually, once crude oil prices begin to rise back up higher and start to make higher highs again, whether it be due to war news or any type of geopolitical news, or just simple OPEC plus news, right? They might restrict production even more, right? Which squeezes supply, or there's less supply of oil being produced per barrel. So that's gonna drive prices higher, right? Whatever it is, right? Basically, what I'm saying is whatever it is that drives crude oil prices, this will affect names that are related to crude oil. So all I want to see for EOG on this trade idea is a simple break over 136.35 and get a nice entry point to the long side so we can see retest of that previous highs at 148. Okay, so make sure you guys have this trade idea on your watch list, because this is going to take some time to form, but it's a good idea to be watching for, right? So I mean, even just VLO, right? Even just VLO, this is looking really good. I mean, VLO still has the properties of making higher highs and higher lows. It's just that it's now consolidating, so I'm not going to look at it now since we're still sitting at all-time highs and really just no man's land, since this is a new territory where we haven't seen any type of previous price action or price levels. But I love the fact that we have pulled back down and we're near, we almost retested this 166 daily support level. But yeah, guys, so EOG, it's a trade idea that I want to give to you guys, and hopefully you guys can have it on your own watch lists. I wish I played this along with VLO, but I had a lot of concentration on that VLO position. So 210%, not too shabby, right? Not too shabby at all. So, again, crude oil, I mean, it's consolidating, right? It's doing what it can to consolidate, and it's been following my price path structure, excuse me, guys, to a T, like literally to a T. I drew this back in, I think it was back here, actually. Yeah, it was back in it was late January. I drew this in late January. So it's pretty incredible how much we followed this price path structure to a T. And so if we do see a pullback now in crude oil, I would expect to see at least a retest around 80, or at the minimum, come back in between this 80 to 83.50 area. And then we see a pivot and we start making higher highs again. But so far, this is really just ideal, right? Ideal price action following my literal doodle on the screen. Right? If you guys kind of imagine, it's basically a doodle on my screen that I've drawn here, and it's following exactly the structure, the path that I've drawn here. So, if crude oil decides to pivot once it retests a major area of support, I expect EOG to do the same. Personally, I would like to see EOG coming back down to 126, or at the minimum 126 to 128 or 128.50-ish. But you know what? Let's keep it simple. I'll just look for a retest of 126. But if it don't get there, again, I am looking simply for a breakout entry point over 136.35. That's it. I have my alert ready already, so you guys should have it as well. Okay? I'm giving you guys a thumbs up, but you guys can't see it, so oh well. I plan to have a webcam in the future, so that's in the works, guys. That's in the works. I don't know if you guys would like webcams because I have seen mixed, I guess, reactions or comments to webcams and used in other videos, whether it be for gaming or whatever it is, right? And some people say it's kind of distracting. They're only looking at the person's face, or they're not even really listening to what they're saying. But you know, when we're looking at something like this, right, in trading, when we're focusing on the actual charts instead of someone's face, you know, I kind of take that seriously, those comments seriously, whether or not it's going to be distracting or not. So, you know, hopefully, you know, I can get the webcam and see. Well, I'm still debating, but in my own head. But yeah, I'll let you guys know. All right, well, that's pretty much it for this live stream tonight, guys. You know, if you guys have any questions you guys want to ask me or any tickers that you guys want me to go over, please let me know. But yeah, that's something that you guys should be watching out for the rest of this week. I will update you guys on what occurred on Thursday. So tomorrow and Thursday's price action for Thursday's live stream. But yeah, I truly think that we are in need of a slight bounce. I wouldn't say just, you know, a huge pivot or a nice V-shaped recovery back to the upside, just a simple bounce like I've said a few minutes ago. And I truly believe that EOG can become a pretty good swing trade idea in the near-term future. Again, this needs a few more weeks of consolidation at the minimum, you know, 3 weeks, 2 to 3 weeks. I would say 3 weeks of consolidation before we make another move up higher. But hey, who knows? We're in a completely sensitive environment now in the markets, geopolitical news, you know, demand and supply, always moving crude oil prices, and etc. Right? So who knows if today's low or this week's lows is a pivot and we can see a breakout over 136.35 by the end of the week, right? Who knows if that happens by the end of the week, right? So things are getting pretty volatile, right? Oh, and last thing, guys, I want to take a look at VIX. My God, I almost forgot to talk about this with you guys. So VIX is pretty interesting because we're still making higher highs and higher lows. So that's not too good. That's never too good, in fact. So hopefully you guys are and have been heeding my advice as to, you know, the reasons why you need to be looking at the VIX now, right? This is a great time to be looking at the VIX and following it precisely. Because again, I've already told this to my members, and for any of the private members who are watching right now, go back to the Discord and look at the Trade Room channel and search up VIX. I talk about VIX, I believe yesterday. Yeah, I talked about it yesterday and today as well, if I'm not mistaken. Yeah, but my memory is failing me there. But the VIX, all right, guys, the VIX is going to be really important when, I'm not saying if, when it hits that 20 value, this level right here, 20. Because when it hits 20, that's going to cause some panic. And we have not yet seen panic just yet. That's right. We haven't seen any panic yet. For example, today would have been a great day to see panic. Instead, we didn't. We didn't see any participation from sellers or buyers. And we, again, both groups were on equal footing. So, you know, once we see the VIX hitting that value of 20 and maybe even crossing above 20 and upticking higher, that's going to cause the real panic that will inevitably lead the markets to pull back and continue to move back down. And if we reach the horrifying value of 25 on the VIX, the S&P 500 volatility index, that's when we should be looking for a potential market pivot back to the downside. Okay? So hopefully you guys understand the gravity of our situation here, because I mean, let me just give you guys a quick example on the VIX, right? I don't know if you guys were looking at this, but when we saw that initial pullback in July, right, in July of last year, all the way up into October, right, we saw the VIX kind of dying down as we saw that initial pullback in July, and it continued to move lower. And then in September and all the way up into the official pivot in late October and transitioning into early November, we got a huge spike in volatility, right? We saw volatility expanding rapidly, and we went over that 20 value, and we saw some really quick panic selling coming in and setting in that last week of October and into November, right? But obviously it was the last week of October, since we did see the official I guess low in October 28th, I think, if I'm not mistaken. 27th. Okay, October 27th. So, you know, it's going to be interesting to see whether or not we decide to go up all the way up to 25. But based on what I've told you guys, I think we're just gonna pop around, you know, slightly over 20. And since I am not expecting a complete erasure of this entire run up since October's lows, like I've stated like 20 minutes ago. So, you know, the VIX should be taken seriously at this point because the markets are in a new downtrend. But at the same time, don't think that we're gonna be seeing like a market crash where we, you know, pop all the way up into 25 and maybe even up into the 30s, right? I mean, that's not happening. Let's be realistic here. Okay, so unless World War III has officially started and we start exchanging nukes, the markets are not going to go all the way up into 30s again for no reason, right? For no reason. All right, it's not going to do that. So if you guys see any type of fear mongering on Twitter, on FinTwit about the VIX going to like 25, 30 or something like that, I just ignore it, right? I mean, that's just outrageous. Okay, unless something drastic happens like World War III, I'll leave it at that. I'll leave it at that, guys. All right, well, we're hitting our 33-minute mark here. That's it for tonight, guys. Thank you guys so much for liking this live stream and just smashing that like button every single time I'm even live, before I'm even live, guys. You guys are always showing that great support. I truly appreciate that. And again, it really helps with the YouTube algorithm. So the fact that you guys are even liking the live stream before it begins, that's amazing. That's really amazing. I truly appreciate that from the bottom of my heart, guys. So keep on doing that. It's really helping out, and it really helps me to understand that you guys are liking it and really comprehending this applicable information that I try to give you guys every single Tuesday and Thursday of every single week. With that, have a great rest of your night. I'll see you guys on Thursday at 8 p.m. Pacific Standard Time or 11 p.m. Eastern Standard Time. And yeah, good luck and see you then. Thank you guys so much for watching.